Welcome guys, Z is here. As I promised, I will make a video about CRT, but not any video, but video that will clear your fucking doubts, that will make something out of this concept. So what is candle range? Just a candle like this, time-based range, because it's between two vertical lines, whatever happens right there. This is time-based range because it's between two time periods like that. Now CRT works only paired with a key level. If you don't have a key level, CRT will fuck you up. Now it can be gap, it can be anything. The candle range can be a thick candle wicking into the key level, being souped into then reversed 50% target one like that. It can be, again, it can be smoke candle like that, not even tapping it. It can be any candle. If it's paired with the key level and the correct order flow, bullish or bearish, then you will find a high probable setup following this. Now also consider SMT, because it can happen like this with candle 2 and 3, like this with any asset, so candle 2, sorry, and candle 3 just sprint into the high. So you have to pay attention to everything, but the must is first order flow, then key level, then you choose the range that you want to trade. And if you focus from daily candles and above, you find the better success. That's it. Let's just jump on daily chart on any asset. Let's just break down whatever happens with some logic. If you don't want it to be hindsight, let's choose anything else. Let's see USD like that, like this. Let's go back somewhere like 2024 is okay. Now following the order flow, what the market says. For us, we're in a big range right there. These are our extremes as we see. So the market is in ranging profile on the bigger picture, which means, look at this, what's this? Okay, like this, we're ranging. Of course, inside this range you can have expansions, you can have anything. Now let's jump on daily time frame and see what happens. First, right there, we rejected the low, close above, and see when we closed above this one, the candle that rejected, that's a potential key level, and the candle that tapped it was a potential candle range, right? Next, close above. Is this a bearish candle to be used as an order block? Yes, it is. So potential key level, potential first candle range like this, candle range like this, see tap again right there, CRT low to CRT high, potentially this one like right there. Now of course, if you see it in hindsight, this is again CRT, how it happened, with a potential key level right there. See, key level again, giving the retracement. And this is important to watch what happens right there. You have to pay attention to important things. The order flow, the first thing that we have to reject a certain low because of XYZ. Now key level again, but right there, what happens? Candle above it, next candle open low, key level. What's this? Candle range, right? Now when we go above, this is what? Old high, also a key level. See, this thick candle right next to it, what's this? Candle range. When we got to the low, rejection. What do we have above? Key level right there. What's this? Candle range, like this, right? Going down into the potential another key level to continue the order flow, going up, gap above, continue, potential key level right there, like that. What's this? What's this? Right above the key level, right? Engineering people, open low into the key level, high close, close above this, so it can be potential breaker, going up. And right now, first, where we are, where did we get from first some sort of old highs going up, potential low that took a high, breaker. So my order flow from right there is a potential bearish order flow. Now let's add the important things. Monthly open, let's see the monthly close, where is it? Like this. Now what I need, if I'm bearish from this moment on, I need a key level and a potential candle range, right? Now see, from this opposing thing, I have created this candle range, and this candle range high is a gap. So what I can see is this or this one as a potential candle range. Depends on how the next candle opens. Let's see. We have open low. Let's see what happens. Going down, creating order block again. Rejection. What's this? Thursday. End of new week. Let's mark the new week open to see what happens on Monday. Friday like this. Monday. See. Potential key level. Tap. Wick above. Monday. Drop. Right there. Continuing the week. Let's say Monday. What did we do? We have a potential rejection block Monday, Tuesday. So Monday can be some sort of retracement. No, it's not. Why? Because the order flow is bearish. Continuing down, potential key level right there. Going down. Close below a low. Potential gap. Let's see what happens. I can say this is a potential candle range because of this is a breaker and the gap. Yeah, we can say it, but that's a new month open, so we have to pay attention to the higher time frame than the daily and probe the order flow with the daily thing, which means rejecting a high or breaking a high and rejecting a low. What's going on right now? Let's see. Price going down. I have a potential target after this bearishness. Let's see where we go. Key levels right there. Breaker, gap, gap above. So this gap can be unfilled because of the breaker, but let's see what happens. This is a potential candle range to be finished down. Let's see right there. Now that's a potential key level. What happens next? Oh, it lagged, sorry. See, potential key level, tap, wick above, next candle, dump, like potential candle range right there. And we also rejected the high. Let's see how it goes. What's this? New month open, right? It's like this. Yeah, exactly. Taking old low, it can cause retracement. That's my draw on liquidity for now. If you don't have any sort of SMT, of course. Now what happens, we take an old low, which day? Wednesday. What can happen the next day? We have a great possibility to retrace until there, but pay attention to this order block too. Let's see what happens. See, the order block, order flow is bearish, potential candle range right below it, right there. If we try to go on 1 hour, what happens right there? Let's see 4 hours first, because the higher the time frame, the better. Thick candle to the upside, filling the FEG right there. Candle range inside of that, close below model number 1, potential sell into the range low. Dump. Let's go on weekly time frame. Where we are, we have some sort of big low right there. So this is a potential. Depends on how we expect. See, thick candle, gap, potential candle range Thursday. This one to be finished down. Let's see what happens. Right there. Right. Candle range, key level, soup, expansion. Now see how we put a low right above the swing low. We reject the high, a potential dump again. Let's see. Good one. We tap the key level in Friday. Now new week can do open low, so a potential Friday candle range. Let's see. What the fuck, right? Easy. Now potential daily model number 1. Let's see what the market does. Tap the key level Thursday, potential candle range. Wick below, close above, right there, candle range. Now order flow is shifted. Do you see this? External range liquidity giving a potential flip. Now this high determines what we do next. Let's see until the high. Now we go to the high, we reject it. Another swoop of the low. So now I need to close above the high that took the low, which is this one, in order to become bullish. But this is important because right now this Friday is a potential candle range because this is new week open low. So if I mark the previous week, it's this candle. See, Monday to Monday, this is my week. So I have a potential move from this Monday up to this weekly candle. Let's see what happens. Right there. Let's see now on weekly time frame what happens. What's this? Potential key level, old low, range, close inside, candle 3, easy buy. Let's find an entry in this one on the weekly time frame. What's this? Open dump, rejecting a low to going higher. Now what happens next? OT into expansion. Weekly time frame, what do we do? Close above potential key level on the weekly time frame, so I can easily frame daily candle range using the weekly key level. Let's mark the next week, Monday. Let's see what happens. We engineer some. So this one is important. Let's see this what Tuesday. Let's see if we tap something or we go deep. If I am bullish above this, I need to see a rejection of the low that took the high. So potential dump. Now I would like to see this swept and then potential move up again. See, good one. Close above. Tested the key level right there. See, tap, move up. Now putting a gap. This one, what's that? Thursday. It can be called a potential candle range because it's the low, which is the gap too, right? A big liquidity pool. Let's see what happens. Dump. So Friday, new week is the next day. What happens? It was open high, low, close. So Tuesday, sorry, gives me a potential setup if it's an open low, potential open low to swoop and go up. Let's see what this open low, high. And let's see on 15 minutes if we can go. Let's now 1 hour, sorry. Let's mark the Wednesday candle and see if we can frame an entry right there. First, do you see any key level? Right, this OB. So I would like to buy this low into this high. Let's see what do we do. First, I would look to buy at a key time, which is after midnight. Let's see, do we have anything? What's this? Midnight, open low, 1 a.m. close above this, and now London open 2. Let's see 3. What do we do? Now like that, let's take a buy like this. I would use a stop loss, my invalidation level, which is the key level. Target is obvious right there. So now the setup looks like this. Let's see what the market did next. Okay, good one. What did we do right there? Key level sponsorship. Thursday potential candle range, but Friday closed below. Monday closed below Friday. That makes Monday potential candle range right there, finished. Let's see, what do we do? What's this? Friday still closing above Monday. Next week open low, key level, pump, close above. Now Tuesday, what do we have? We have order block paired with gap. This Tuesday can be a potential candle range. Let's mark the important things. Key levels that I have, gap, OB. Let's go to 1 hour, but first mark next days to see what happens next. Now let's go to 4 hour first. Do we have any potential key level? Now this down close candles can be used as a key level pairing with this one. But yes, let's wait and see what happens next day. Drop, daily order block. What's this? 1.5, potential 9. Let's see if, yeah, clear. Like this. Now the new day. What's this? We have soup at what time? Not really good time. So I would like to see potentially Thursday low of week. After midnight, potentially London forming the low of the week. Let's see if we can find something. Okay, when do we hit it? 3, 4. Like this. What's that? 9. Let's go to 4 hours. Daily to see a key level and think the rejection block right there. We are still inside the order block, but on daily, yeah, that was some hindsight bullshit. I would expect at least this will be rejection block on daily time frame to give me retracement at least to finish this candle range. But let's see what happens next. Yeah, a little bit hindsight was that, right? Like this, low. What's this? Friday. Let's mark first the new week. Right there. Remove everything else. So I am waiting for a new week. I need a potential soup. I have a low right there. But let's see what the order flow is first. I'm still bullish and I have potential. Did I reject this? Yes, I rejected the low. I took the high. So I can potentially expect a bullish week. Yes, let's see what happens. Yes, see. We tap opposing PD array and see what happens. First candle taps the key level plus this order block. So the next candle was a potential retracement into continuation of the expansion or complete reversal because of the order block pair trade gap. Now, what I wanted to understand is that a single candle is important as candle range when you have a key level. Then you can look for soup, for model 1, breaker, OT, everything else. If you don't have a key level, just don't look at this. Go trade ICT shit and do your best. Nothing bad to ICT, of course, but yeah, you need a key level, and that key level should follow the order flow. And when you have these two aligned, then you can potentially look for candle ranges. Combine, of course, SMT. You can use the quarterly if you want the sequential SMT. It's good. And focus. Key level, order flow. And the key level should follow the order flow. Then CRT. Don't go CRT and based on a single candle without any logic looking for a key level that should sponsor your idea. Look for something that the market wants to sponsor, not what you want to be sponsored. Focus. Order flow, key level following the order flow, then CRT. Without a key level, CRT is 0. Now some crazy shit. Yeah, let's go on weekly. See right there, key level, tap, potential candle range, soup close inside, next candle 3 buy. Continuing like this, what happens? Let's see. We go like this. See, taking external. This was a potential candle range, but the order flow is bullish, so mark the 50%. Let's see what happens right there. Retracement until when? So this candle right there is a potential candle range, this one. Why? Because it's above a key level, inside a key level, and it's the first candle that tapped the key level. So I would like to see bias until right there, but let's see what happens. Okay, taking that. Now key level right there. On daily time frame we would find the CRT, but let's continue right now. Yeah, like this. Use key levels always with candle ranges. Don't miss key levels. If you miss a key level and you don't see it, it will fuck you up. Now let's see my EURUSD outlook. First we have SMT with Dixie. So my candle range is this one, paired with this candle as an order block. Not only that, going on weekly time frame. Look at this one, key level. What's this? Potential candle range right there. Weekly candle range aligning with potential monthly candle range, giving me the order flow. Now what happens? So daily time frame. See Monday, open low inside a key level, taking Friday with potential big higher probability candle range. Right there, what happened? See, external range liquidity is key level plus the rejection block and disorder block. What happened right there? Candle range Tuesday, Wednesday soup, going down right there. Then what happens? What's this? Wednesday taps the key level. See, close below, tap, potential candle range right there. Soup, close below Monday, tapping a key level to give retracement into this one. Soup, so Monday is what? Potential candle range, right? Like that, exactly. This one, potential candle range. Why? Because of the key levels right there, the gap. But we have SMT, now close below, into soup, into potential reversal until these highs, because this is all low resistance liquidity right there. If you can see it, that's all low resistance highs. And yes, we can see a run up, but we will see what Tuesday gives. Pay attention, win the game, use the key level, and that's it. Thank you for watching. Enjoy, comment down, and let's fucking go.